I'm back.
Okay. Can you see my?
Yes, I do.
Okay. Um, let's go to the new 78-day high offset. You know, sometimes what I usually do, yeah, you know, we have all this, like these are presets chart, but you don't really know exactly what are the rest of the other information on the left hand side of this one. So that's why you click a particular chart so that it opens up wide, right?
Mm-hmm.
So, okay. You still have the visibility?
Yes, I see.
Okay, good. So this is what you usually do, right? There is another window wherein you can see, and then you can set it up to 2 years, so that way you know exactly what's going on with this stock. So for example, this GOL, Gulin has, um, you have a lot of series of N78, but do you know where are the new 78-day high of this one?
No.
We know exactly that, okay, today or last Friday, that's your new 78-day high. So this one here. So that's why usually I just hold the shift key. Uh, you know this one already, right? Then you just add an information.
Mm-hmm.
So that way it gives you a note. Now, other than that, you can also scroll from here. So that way it continues to scroll over for the rest of the other items. Now, one of the major thing that Stockfetcher has, okay, let me share the other screen, is the so-called historical. So
Yeah.
if you click this historical, it will pop up this smaller window. Here, you don't see any marker at all whether there's a new 78-day high on this one. But we know that this one appeared on the Friday, so that's why this is a new 78-day high on the July. What is the date? The last yesterday was 5, right? So
Yes.
July 5. So July 5, a close of $18. That is your new 78-day high. But previously, what is the new 78-day high of this one? So what you do, you backtrack. So July 3, what I'm going to do is I'll use a different end date. So let's say 5:30, and oops, hold on, this is Dr. Hey doc. Oh, okay. Oh, you have another situation as with corporate. Okay, no problem. I'll send you another link. Okay, all right. He's got the same trouble as with you. Okay, let me do that. Got to invite him again. Right. Give me a second. How come it? That was crazy. Why it did like that? Hey, Cooper, still there?
I am here.
Okay, here you go.
Mhm.
That's right. Oh,
Okay,
there you
I
are.
can see
Hey,
you.
Doc. Good afternoon, Doc.
Great.
Hello?
Okay, I'm here. Sorry about that.
No
I,
worries. How are you?
Oh, good. I'm. I was trying to review the charts you sent me and trying to figure it out on Stockfetcher and Trading View, and I'm useless.
Don't say that. Well, it takes
I
a little bit of time to get to learn the stuff, but
okay.
slowly you just like you said before that the way you look at chart now is quite different than before.
Yeah, yeah. So I mean, I put support and resistance lines. Then I,
Uh-huh.
then I was trying to put and trying to figure out how to adjust it to look like how you had it, the dash line and the different colors. I kind of sort of got that. Then I was trying
Okay.
to put the triangle, the VCP thing, but
Oh.
I couldn't figure that out
Mhm.
from trading view. So I just said, oh my God. I early this morning, I said, let me practice.
did,
Anyway,
did I give you a copy of that, Kufri?
um,
that was the
no,
AMD
The
one.
yes,
AMD?
I saw that last year. It was yesterday. I saw that.
Oh, you saw that. So
Yes.
okay, so all right. Because I'd like you to do the same also. Like I gave my analysis, but then yeah, I would like you to go deeper also so that you will know what to do also when you are by yourself.
Okay.
Yeah, hello, Kufri.
Hello, Doc.
Okay, so back to what we are supposed to to learn today. Um, the purpose why I'd like you to pull out your stock fetcher because the stock fetcher, I have just given you the filter, but that's it. I haven't shown you what else can you do with stock fetcher. So I'd like you to do something more. That way you could like really analyze what you have for charts and based on whatever data that is in the stock fetcher. So everyone has the visibility of my stock fetcher.
Yes, I can see.
Uh,
You doc?
yeah, I'm just going back. I minimized it because I thought you were going to say open up stock fetcher, but I don't know where mine went. Oh, Launching. Oh, there it is. Okay, it's in the corner, top corner. There, I can see it. Yes.
Okay, perfect. So I'm just highlighting the new 78-day high here, and I have here all these charts. How would you know what are the rest of the new 78-day high hitting on a particular chart? Because sometimes it is good to know if there were other new 78-day highs already that had been traversed by this particular stock. So how would you check based on the historical data?
Can you change the date and go back like one day at a time? Or
And that would be very hard because
no.
if you do that, it means you've got to go one step at a time, right?
Yes.
So here's one cool thing that you can do. You see here, you have 3 months, 6 months, 1 year, 2 years. So if you click, and then there's historical, right?
Yeah.
If you click historical, it pulls you up this pop-up window with a chart. Small one, but it gives you a good analysis right away. Now, usually it will give you a triangle, a green triangle, where there is a new 78-day high. Right now, because it's a new 78-day high, that's the last trading day, which is the Friday. So we know exactly that the next trading day, that would be Monday, there will be a green here under July 5. So, but right now we see that there is a breakout, but let's say I would like to investigate what are the other new 78-day highs happening with this particular stock, because it seems that it had gone down and then had crossed over the 200 EMA. So here in the ending date, you can change the ending date. So for example, I'd like to take a look at probably the ending date would be May 30. Change this one. Still, I don't have visibility of any green triangles. So I'll change, say, because it will show you year per year. So maybe 11, November 11 of last year, or November 30 of last year as my ending date. There you go.
Oh.
There was a new 78-day high that failed.
Yep.
If we will try to investigate more, I'll try to change again the date here. We have November, so probably I'll do
October.
05/30 of 2018.
Oh.
Here you go. You have 3 consecutive new 78-day highs already. And with a really huge gap up here, November. A huge gap up. Now, what I would like you to learn is that any gap up, there will always be a time wherein it's going to close down. It could be sooner or it could be a little bit later. Any gap down is the same. But gap up with a huge volume is a potential quick run to a really huge price run. So like for example, this one, a gap up from $4 to $8. And then all of a sudden it added again, what, $6 more on top of the gap. So if you look at here, you have a new 78-day high. When was that first? April 6, 2018, and then followed by September. Oh, okay, hold on. No, The first one is September 21, 2017, then November, then April 6 of 2018. Now, look at this one. If I change this to, let's say, to 730. I want you to notice the previous high before the gap up. The previous high before the gap up was $4, right?
Yeah.
Okay. I'll move this one to November 30. Look, it hits the top. So these are the ones that you need to take a look at. Okay, I'll move this one probably to maybe August 30. Okay, so we see that we have here a perfect run of a new 78-day high and then a new 78-day high which failed. If you come across with something like this, your EMA 20 and EMA 50 crossing below, the EMA 20 crossing EMA 50, then later on the EMA 50 crossing the 200, which is too far down. But this will be your first signal here. If the EMA 20 crossed below and including the EMA 30 crossed below the EMA 50, the 50 is the orange line. If that one crosses, you have to make sure you already exit the trade, because a big possibility is going to continue to drop more. And because of that huge gap up, the usual tendency is to look for that gap to close. And indeed, this one is sitting at 5, but it still is going to drop because the last height that we have before was 4, right? There you go. So this is around $4 and it hits. Then after hitting that one, it rebounded. And this is your perfect entry here when the price sits above the 200 SMA. You can again go for a good run. But since that one is not a new 78-day high, if you really would, that could be a new 20 days high. So let's do, 19, say 04, 30.
No triangles.
No more. Triangle. So 4. 11. Oh no, July 1. And look what happened. What day? July 5, 2019. A gap up and a strong volume, breaking all the previous high. Now, take a look at this one. Most of the stocks, okay, it will follow a pattern based on its previous run. So that's why I always backtrack of the chart and look for a possible scenario. If, for example, what is the behavior of this stock? Right? few months ago. So if I go back to 5, this one is a gap. It went down just to level the low of the breakout candle before it jumps back up and continued a push going upward. So this could be a similar run when it goes that's good. Right. So a similar run that it will go up, find a pullback. The pullback could be either on $20, which is a whole number, or it will go and rest right at the open of this candle before it's going to shoot higher. Okay, and new 78-day high. So it was a long new 78-day high because when was that? The last one? It wasn't here. Oh, it was 2018. 11. Oh, the failed breakout. From the failed breakout. So the big possibility that the next run on this one is actually to break this $14. Now, if you go to the trading view, gold. All right. Oops, where's my volume? Hey guys, are you there?
Yeah, yeah.
Okay, so okay. So this is a new 70-day high. Oh, this is a very nice stock. They just issued a dividend here on this date. You see this letter D?
Yeah.
That's why a lot of people were buying. Okay, that's because they issued a dividend on that day. So that's one of the reasons. Now let's just try to see if there were any other. So that, okay, did they have a dividend also here? They issued a dividend and look, it went up. Here, with the but maybe because some of the investors would really love to have a cheaper one before buying. So if you look at this,
So what does the S mean?
the S,
Yeah.
that is actually the when they release their how do you call this, their statements, financial statement.
Okay, so it's not
So
like it is a loss.
S is the release of the financial statement. So there was a release of the financial statement here. There is a release of financial statement here. This release of financial statement here could be vital. Probably there were some revenue revving up on this one, including this. That's why the stock is ramping up. Okay. So that's why you have to take note of all those S and D. So right now it's not also the dividend. It's actually the breakout from all previous highs. And we have a gap down here. What did I say? Any gap down or gap up, it will always tend to close. So it means it will try to close this gap down. It just ends. Oh, actually, it breaks out. It hasn't closed, but it breaks out that gap. So it means there is a big possibility that this one would come down just to close this gap, and then before it's going to continue to run higher. And if I will be buying on this one, I'll buy right at the tip of this one, and I'll just have to do how do you call this, a buy order at a probably maybe a range of maybe a month or two, something like that. If it hits, I'm good, and leave it there. It will continue for itself, but we'll see what it has to show also on Monday. But right now, this space here was the gap down, but it created also a gap up. So nothing is closed. It means this price here is going to be retested. This space here is going to be retested. And I'll wait for that retest. Okay.
What what guarantee do you have? I mean, of course you can't guarantee, but you have to wait and see which way it's going to move, right? That's what you're saying. Because if you buy at what's that, 1764 or just below, I think that's what you said. That resistance line, and you're saying that'll become support, and then you would buy at that point because it's going to close that gap once it comes back down.
Yes.
Am I correct in saying that?
Yes.
Okay.
Look at this one, Doc. There is a small space, and look what happened. It comes back down.
Yeah.
And then usually it will create something like this. So just like what it's doing here, it will try to create some kind of hammer that will first touch or kind of like retest. Now that touch of the hammer would be your how do you call this, basis that sooner or later, the price would follow through with the tip of that hammer. So same as okay, yeah.
Yeah.
This one here,
Yeah.
but there is no volume, so that's why it doesn't have support. It made a gap, but there was no volume, so that's why it just any price increase without a support of a volume, there is a big tendency that it's just going to collapse, and that's what happened here. And then that collapse again will find support on major moving averages. So just like what happened here on 200 EMA, so it found support on 200 EMA before it's going to break down. This one here, this one is a failed breakout, but it retested the stop of this breakout here. This height here had been broken by this candle, and then it was retested. Then again, a retest or a breakout, like a small breakout because of this dip here, and a gap up. And anything that you have here, if you look at, okay, you have a big volume here. So when you see this big volume, it means that there are some traders that had been trapped on this. So people who been wanting to basically buy at this time, but then the price went down, they'll wait for a big possibility that the price would just barely go to where they had bought that price or that stock, and then they'll just dispose. So that's why you will find a lot of resistance if you see this particular space. So that particular space will always have resistance. And then since there is a gap up here, and in fact there is already a strong resistance right overhead on $21. So 22 is a major resistance pushing back to 21. So there's a big possibility that this one is going to be retested. And if you are going to create again, just scribe a line on the volumes. This is the heaviest volume that is on site with this huge green volume. So it means if it's going to go drop down, this will be your support. Plus the fact, now I'd like you to create also something, a regression line. This price is already on the top of the channel. So any price that reaches the top of the channel would always go back down and find resistance. And then that is where it's going to go down and find support on the other side of the channel. Let me input coordinates, visibility. Where's that one? Right. Extend line. There you go. So the next possible possible support of this one is right here on 1785, because this one is already it had already reached the upper channel. So most of the time, if it reached the upper channel, it will always try to go back down and find the next support before it's going to go back up. And if it cannot be supported there, then it would continue to the next channel. This is the median, and then goes to here. So if you scribe something, just like you have this, you create some kind of a wavelength. 1, 2, 3, 4, or it could be this way. So this one could be running right still on 1785, but it may slowly just, you know, decrease volume and hit that particular support before it's going to go up higher. So this is one of the things that you need to know of how to basically study a chart. Look up the channel. Where can you find this regression channel? You just have to go where the line is. There's a regression trend, and then just scribe a line. Double click on this, extend the line. Usually it's too dark for me, so I'll try to lighten that one up.
Yeah, this is what I was trying to do today in the morning. Yeah.
Yeah, I think I gave you something with an EMD like this, right?
Yes.
Correct. So that one is the regression channel. And if you, this is typical. Sometimes it goes further out of that the upper channel, but most of the time, if it hits an upper channel, it will always look back and find another support before it's going to continue, because it will follow the it's a pattern, and sometimes it's the psychology of every person trading also. So people, once the traders, once they see that it hits the channel, they'll start also selling, because this one will probably go down. So everybody now will be thinking, I'm going to dispose my share. So everybody will be disposing their share. So that's why what I'm going to do, I'll just wait until it comes back down to the tip of this highest point before it left and created a gap.
So when you put this channel on, where do you put your pointer? Like in the middle?
You just scribe it, Doc. So like I'll place this one here at the bottom of the lines. I can even place it here, but we'll try to look for that one. So, but wherever there's still a wavelength, okay, you place that line, and then it will just basically interconnect, like end to end of the lows and end to end of the highs.
Okay. Can you show how to put the VCP, that triangle?
All right, very good question. So here, what is our VCP? So look for the triangle.
Okay.
So this is your breakout. Right now, oops, sorry. Hold on, put that one back. See here? It's hitting all the highs.
Okay.
all the lows, but okay, there you go. That's it. So it's hitting both ends of the triangle.
So when you put your cursor where your ellipse is for the breakout high.
Yes, you kind of like connect all the highs, connect all the lows. Okay, so that's where you could find your triangle. So in this instance, the triangle is kind of like facing upward.
Yeah.
Then this is the breakout here. If we do not have the visibility, let's say, for example, we have something like this. We are at this end. I'll remove first this one, huh? Because it's okay. Let's see. We have the picture of this. Where is your triangle?
We do take it from the low point, that high volume in December, middle of the first week of December. No, okay. I was going to draw a bigger one.
You can, yes. You can.
This is what I wasn't understanding, how to place the thing, how to find it.
Don't think of there is this red line existing. So basically, yeah, you have this. So you can actually it goes also that way because you still have. So you have a triangle hitting all those highs and lows, right?
Yeah.
This is your breakout. This is what we call. This one is a breakout, but this is now a false breakout because it collapsed back to the median of the triangle. If the price collapsed back to the median of the triangle and goes below it, then it's downward. So that's what happened. See here? And it will continue more. This is what we call a pocket. Sometimes the market maker will create that. And then a sudden dip, and then all of a sudden it goes back up. Just create a pocket pivot, and then it goes back up again. But here, this one, since it was quite far already from the 200 EMA, it was looking for the 200 EMA as a major support, and it even went down below the 200 EMA. But as soon as it breaks out of the, see here, you have the breakout of the 200 EMA and a breakout here plus a breakout from the previous high here. There you got a continuous breakout. So in one way or another, this is still a pocket pivot, but this is a deep one, and a lot of people are going to get scared if they're going to follow this. That's why, as much as possible, if it goes out of the median, get out, because you might not be able to stomach your losses here. Okay, so that's where you have your triangle. So this one is a false breakout and a pocket pivot, and then you have now a new situation here. Here you just have a small triangle.
Okay.
Now, with this kind of breakout, if you want to enter, you have still to calculate your target. Don't just enter without calculating your target. What was our formula?
Target price is
EP is equals
previous high minus VCP low times 3 plus breakout close.
yes. Oops. Times 3 plus BC. So that's our standard formula. Where will be your previous high?
Previous high. The red candle, that support with the resistance.
This one,
Yeah.
1657. And where will be your VL?
Volatility low. Huh. Low. I'm not sure.
Feel free.
I think it would be at the 16. I would take the tip of this small candle here, 1657.
1657.
Yeah.
Okay. If your previous high is 1657 and your VL is also 1657, that would be 0.
Okay.
And that's where that big V is at the bottom. May 16th?
This one here?
Yeah. That's too far.
Yeah. Okay.
That one. Yeah.
984. So here you have, if you look at like the one I told you before, oops, look at the previous volume on the left side. So this is your highest. This would be your next volume, right? Where is that? Okay.
Excuse me.
Okay. So if I'm going to create a line here, where will be my VL? If this is your next biggest volume against this breakout volume, this is your candle. That's your candle.
Oh.
So that is your possible VL. Kupri, you're the one who taught doctor on this one, right?
What you says, Jerome?
So this one is the breakout volume.
Mm-hmm.
You look up to the left side. If we are going to extend a line, which one is the highest volume next to this breakout volume?
That's the
The
candle.
one you are touching there right now.
This one, correct. Yeah. So we will trace what is the candle. Where is the candle of this volume? So the candle of this volume is right here on this spot. So big possibility, either neck to neck, either upper the open or the close could be your VL. So let's say we use the close.
1416.
Yeah, 1420, something like that.
Yeah.
So in that case, you have 1657 minus 1420. Let's say, just make it 1650. So that way, you will not have a hard time to do calculation. 1650, and this one, make this one as 25. 1425. Use the whole numbers. Okay.
225.
So how much is that?
225.
225 times 3.
675.
675. 675 plus the breakout. Our breakout is this guy here, right? Oh, did I close my...
No, that's correct at 18.
This is our breakout.
So that big gap up candle is not the breakout. It's the...
That's, yeah, that's a... You can also use that one as your... So let's say you add that one, but probably that might be too high. So I'll use the first breakout because this one was really the first breakout.
Okay.
1791 or around, let's say
18.
18. Okay. So 18 plus how much is that? 625?
775.
5, yeah. No, 675. Huh?
18 plus 675. So our target price is
2475.
2475.
Yeah.
Okay. So any pullback of this one and wait until it hits 2475, that is your take.
I'm a bit confused. So the target price is if you were to buy and then sell at...
The target price is the price that you want to sell.
Yeah.
Your entry price, you try to get the lowest price as possible.
Yeah.
And it's up to you to manage where is the pullback and use that pullback as your reference point for entry.
Okay.
Okay, like usually I use also the first red candle, and if the first red candle creates a kind of like a hammer, I'll use the median of the tail of that hammer as my entry point. Sometimes it hits that median, sometimes it hits also the very low of that tail. So for example, this one was a breakout from here. This is like a letter F here. This is a breakout. First red candle, you use that red candle. So it still went down, but at least if you entered at 1672 or 1675, then you just have to be patient with all this going down. And sometimes what I usually do also is if you have here what do you call this engulfing. This is an engulfing pattern. So this is an engulfing candle. If I have an engulfing candle, I will use usually the median also of that engulfing candle as my entry. And that's there. It keeps hitting on that 1650. Although there were instances that went down as far as they went down 50 cents more, but you're able to enter and boom, in just few days time, you have a huge gap up. But this gap up is a sign that there's still another run on this one because it tried to get this particular gap down. So basically it went away from that gap down. And because it poked only on that gap down, so that is a poke. Because the body did not really cross on 21.03. It went down, right? And the close is below that one. So that's why there is a big possibility that it's going to come down to this level before it's going to shoot up. You just have to be patient on this one, but at least you know what is your target. If your target is around $24, then any pullback of this one is your entry point. Then now let's say we have the target. Where will be our stop loss if in case it is going to go against us?
I think you said 5 to 10%.
5 to 10%. So okay, if you enter within the body of this candle here, so it means your 1956 should be your stop loss. Anything goes down, that goes down. Now, if you entered in between this, then your stop loss would be $18, below $18. Okay.
So let's
because if for example, you entered within the body of this candle here, and then it closed, but it still went down. Nah, that's too hard to stomach, right? So as much as possible, if it goes down below your expected price level, just get out and then wait for another chance. Because if you are going to keep waiting, the possibility is it might really go against you. You lose a little, but at least you win big if it goes whatever is your plan.
Okay.
All right. So let's go back to Stockfetcher. Who wants to drive and show me the historical?
Kufri.
Yep, I can.
All right, sure. Go ahead, Kufri. I love to see that.
Okay. You want me to share my screen?
Sure.
Okay, if we come to a new 78 days high, we can choose anyone. You were dealing with the GOL. Let me choose ADX.
Okay. Oh, by the way, wait a second. I'll just show you something.
Okay.
Can you still see my screen?
Yes.
Okay. So the last time I scribed face, it went this way. So it hits already the upper channel. Look what happened after hitting the upper channel. It came back down before it continued to go up. And now if I'm going to extend this one, so it means that's the new channel, that's the new upper channel that it's trying to create. So like, it's a GOL. Oops, sorry. Give me a sec. And then if we extend this, so it had really gone up. I'm expecting really kind of like pullback, a quick pullback before it's going to continue traversing that upper channel. Just like what you saw on pace. Like this. It went high here, and look, came back down, but it was a quick one. So it means if I'm going to create an order waiting right at the tip of here, the previous high here, which is my support, then I will be able to have the lowest entry possible I'll have. Then once it goes back up, I got a huge return already. From 1078 to 1445. Although this one I had entered already at what, below $8. Remember the one that I told you? This might be the next square.
Yeah.
Okay, Gupri, your turn.
Okay, I will share the screen then.
I'll stop my share.
Okay.
So you can share your screen.
So as I was trying to say, if, since you already, let me see, you was explaining the GOL, the one that I wanted to choose ADX, where is it? It's here, this one.
The next one, TRX.
Yep.
Tanzania.
Yep, this one. So I'll go to the historical.
Yes.
Okay, they will tell me all this, but
Yeah, you don't have to worry that one. That's the script.
I scroll down, then I see the last one was in April. It doesn't tell me the date, but it is at the end of March, maybe like March 29. So if I wanted to know, it happened in July 5th.
Mm-hmm.
It also happened in April, like March 30th. Then if I want to know when it happened again, I can come out here.
You change the end date.
Change the end date. This is March. No, that is July. I can change that to March to see. Or maybe January 01. Let's see, 2019. Yeah, somewhere in May.
It's a failed breakout. It's a failed N78.
When you say fail, it's because immediately it start going down.
Yeah. See, it created a double top right there. A small double top.
The white and the red, is that?
Yeah, two whites actually,
Okay.
side by side.
Yeah, and this one too. Okay.
Yeah.
Okay. So that's how I'll just keep on changing this date.
Okay, I'd like you to notice something.
Okay.
If you take a look on the left-hand side, there is like a wave going up, and then another kind of like a crown, right? If that is what we call head and shoulder. So the one with can you see my cursor? No.
Oh, you want me to look at your screen?
No. Oh, no, no. Okay, go ahead. If you could move your cursor somewhere between April and May, right on between 0.55 and 0.6.
55 and 6.
Between 0.55 and 0.6.
Yes, yeah.
Between
Yeah.
April and May.
Yeah.
April and May.
Or between April and May would be somewhere
Right
here.
there. That is your first shoulder.
Mm.
The one on top, the one on the very top that formed two double top is the head.
Okay.
And then the next shoulder, the right shoulder, is the one right on 0.6 of June.
Yes, on June, yeah. This one here.
So a formation like that, head and shoulder, you have to watch out, and especially if it breaks down a major EMA or major moving average. A major moving average is 30. It breaks out 30, and that is a head and shoulder. Then you know already that that is people. When people look at this one, investor traders, whatever, when they see this one, they know this is a head and shoulder. Everyone is already thinking of getting out. That's why there is a rush. That you have you noticed here? It's all rush selling because everyone is now scared of that particular pattern.
And it actually happened true. It happened to be true.
Yes. So watch out for head and shoulder. Head and shoulder is and the opposite of that one is W also. When you see also a W right at the bottom and you see that kind of formation, that's also a sign of a bull running upward.
So if I may ask, does this stocks not reach up to $1? Is that?
Yeah, for the time being, I don't want you to play those things. You know why? Because stocks that are below $3 or so, or even $5, they are prone to manipulation, especially to people who have huge pocket. So go for the time being at least above $5, 7, better still 10 and above. So that way they are not prone to manipulation.
Okay. So what else should I do here? This is also change the historical.
Okay. Can you still go backtrack?
Yes.
Let's say 2018.
Yes.
Maybe August. Okay. So it was already, it keeps failing. Okay, May. Oh, well, okay, May. Sorry. So okay, go backtrack again. Maybe February. Oh, no, May 30 of 2018.
It has been a long time since you got the new 78 days high, 78 days.
Yeah.
It doesn't have again.
Okay. If you notice, this is a very volatile stock. If you see a lot of red right away, like jumping back and forth like that, don't play those kind of stuff.
Okay.
Okay. I know there's Tanzanian royalty had been actually a target also of short sellers. Because the Tanzanian realty, they have a mining, and then sometimes all this mine stuff, the only time that they kind of become a supernova is then when they are going to say, "Oh, we found some ore, you know, and then we have this pretty gold mine, and then a lot of possible, you know, volume that we could get." So sometimes they are B like news that doesn't really have a sense of after all. And the only way to look at also this thing is to look at their financial statement. And sometimes financial statement doesn't jibe with what they have on the chart. So that's why I didn't even play this TRX.
Okay.
But
So
because we did
that's
not
how check.
filter, because we did not filter this smaller price stock, that's why it occurred. So you can just go and pick up another stocks.
Okay. Do you want ADX? Or should I take ELD?
Wisdom 3.
Let me see.
Yeah, they're not traded very much, right?
Yeah, if you see something like this, you like a scattered seed or something like that, don't play with that kind of stock. It means it's thinly traded.
Okay. Okay, let me back out one day and check if I'll see a better one. This one.
Oh, go free. You can click.
Yes.
You can click performance percent, and then so that way it would. Yeah, click that one. So go back up. So it will basically create a descending order from biggest to lowest on based on performance.
Okay. Do you want us to look at this one?
Historical.
Yeah.
Oh, that's a very nice triangle. That's a very nice triangle. Have you noticed?
Yeah.
You connect all the highs, connect all the lows, perfect triangle. And I think that's a breakout there.
On July.
You wait for a pullback of this one. As long as the pullback doesn't create the pocket, you're good on this one.
But it's kind of trend, how do I call it? It doesn't move, it's just moving sideways.
Okay.
It is a stock that moves kind of sideways, like it's between 16.
A triangle means, see, the first move upward, and then the move downward. That is your first volatility contraction. So this one here, from there to here, that is your first volatility contraction. Then moves back up, and then down. That is your second volatility contraction. And then it gets smaller from here to here. So that's around probably 7. This one probably around 5%. Check the email that I sent you. Let's say from a 25 to 30, let's say 25 to 35% previous volatility contraction going down to 7 to 5%. Watch out for a breakout. with a good volume, that is a potential VCP breakout by Minervini.
Okay.
You can put that one on your watch list and wait for a potential pullback of this one, and check out also what's the reason behind why that one is shooting up.
It is called AMRN. Okay.
This might be a pharmaceutical company. Probably, maybe they have an FDA approval or something.
That is added. We should off here. Okay. Okay. Good. Okay. Anything else you want me to show?
Good. How about you, Doc?
I'll try.
Okay.
Let's see. So.
Oh, by the way, if you cannot do it on the historical when you have to create the triangle. You can only do the triangle by clicking the chart, and the chart becomes big. It's where you can edit, put all the drawings and stuff like that, right? Or you can do it also in Trading View.
Okay, let me just log into my Stockfetcher.
Give me a second, guys. Hi, sweetie. Yeah. Huh? Okay, yeah, sinabihan ko na si mama. Before 4? Okay. What is it? Mm-hmm. Yeah, I asked Elaine to take over. Somewhere. Okay. Malapit na kami matapos. Okay, I love you. Ay, sasabihan ko si mama. Okay. A what? Bibigyan? Oh, okay. O sige, pagkatapos ko dito, okay? Okay, sige. Okay, bye. Bye. Love you, bye-bye. Bye. Sorry, guys. I'm back.
Okay, so I'm going
Okay, Godfrey, did you stop?
Yes, I stopped.
Sharing? The doctor is going to get his own share now.
He's going to do surgery of the stock.
Ha! Not a surgeon.
We will dissect it from head to toe so that we see everything.
That's good. Okay, so I chose this one, which is OCUL.
Therapeutics. Okay.
And let's just go back to, it was from the beginning, so nothing happened. So, what was it, 5 and, no, July, so July. Let me just change that. And I think there was a gap up because it showed up on the screen, right? So that was yesterday. There. Well, it went up. I don't know if it's a gap.
Okay.
I don't know if that's a gap up, but
It's not a gap up, but it's basically a breakout.
breakout. Okay.
A breakout from two previous highs. And a breakout from the 200 EMA.
Okay. Which is the orange line.
Correct.
So it got to support and then it went up.
Yes. And if you look at the volume, you got a pretty good volume.
Yeah, that's why I thought it'd be a good one to look at. It's not thinly traded. The price isn't the range you said, but still a discussion. I suppose it's good. So now if I change here, I change the day, the month. Let's say I go to January. I get a longer time frame. And we had a new 78-day high here, which was in June.
It was a quick one, and then it blows out everything.
Came down. So maybe I go 1 year back. Not a good candidate, I think. Nothing much.
Yes. So in this case, if you look at, I would like you to take a look at the trend of the 200 EMA. You have to make sure that when you find a stock, make sure that the 200 EMA is actually going upward.
Yeah.
But the way we're looking at it right now, the 200 EMA is actually, going downhill.
Yeah.
So leave those kind of stocks.
Okay. So we'll pass on this one. So I'll close it. And let's go back. I think this one, there's not much volume. Of course, there's another pharmaceutical one. Suddenly just broke out. So, but as you said, that the 200 EMA, it was sloping down and then it's starting to turn up a bit. Although the other ones are moving up.
Yeah. This one, if you really would like to play this kind of stuff, you need to have at least buy 1,000 share of this one.
Yeah.
And then get out immediately.
Okay. So not a good one.
You cannot trust this kind of stock. That it's going to hold on for a month or two or things like that. So this kind of stock, if you are going to hold it overnight, you might be crying the next day.
Yeah. And it's showing us here the average volume, it says 30, that's 30,000, right?
No, average volume within the 30 days.
Oh, 30 days.
Yeah.
Okay.
It's just creating this small red line there. So yeah, this actually a huge volume there. That the first volume that you saw, that would have been a nice how do you call this? A nice trigger for you to come and enter, and then the next 2 days, boom, just get out.
Yeah. So we'll pass on that. Let's see. Okay, this one looks more promising. Let's try that. Let's go to historical. Scroll down. So it had a gap down.
Yes. And if you notice it, Doc,
yeah,
it's below the 200.
I was just going to say, yeah, the 200 is sloping down, so no good.
Yeah, and it's below the 200 MA. So the price is really below the 200 MA. And if you look at it, also, Oh, could you set that one to 7:05? Just change the ending date to 7:05.
Oh yeah.
Still, it's not breaking out.
No.
Although there is a big chance that from that point it can break out.
But you would.
Some traders can ride with this one, but you have to be very quick, because if it goes break out past the 200, it's going to retest and sometimes just come back down.
Yeah.
So this kind of stocks, you have to be very nimble.
Yeah. Well, okay. So that's no good.
Yeah.
I'll close that.
Yep.
Let's see what else came up. Let's see. This is again, I mean, it looks still that it's under the 200, so no good.
Okay.
Right? Still under 200, yes. So we're not interested.
Which filter did you open up?
I opened
N78.
new 78-day by high offset.
Okay.
Offset one.
What I would like you to do, click on Friday, July 5, 2019 on the drop down.
Where is that now? On the stock itself?
No, you see on the,
Oh, here.
yes, click that one.
Yeah.
And then change the offset. Go scroll down and then look for the field where you can put the offset.
Previous day, 2 days.
Okay, click 1 week ago.
1 week ago. Okay.
Click on a Friday.
Oh.
No, just the arrow.
Okay.
Okay, and then click performance percent, so that way it will try to arrange that one from higher to lower.
Okay.
There you go. IDT. Could you change your setting? Click that gear.
Click the year.
The gear. You know the right hand corner, on the right hand corner after the chart, and the chart button. There's a chart button. Sorry. You have Friday chart, yeah. And then there's a little icon
gear.
here.
Yeah.
Okay. Click that one, setting. Quick setting. Oh, sorry. No, the drop down of the chart. Go back to the drop down of the chart. Right. Drop down on the drop down. Okay. Click default.
Tiny?
No, default.
Or default. Oh, okay.
So okay. That way you'll have a visibility right away.
Yes.
Okay. Now you have more options here.
Okay. So
this is a nice one. IDT looks like you have.
Looks good. Yeah.
Nice one. See, all the 200 EMA they are all going upward.
Yeah. Yeah.
Okay.
So this is 200. What is that? I'm trying to just remind myself.
Historical.
Okay, so I have to close this and go back to historical.
No, you don't need to close it. Just click historical right away.
Oh, where is it? On here, I don't see.
Right where the very top of where you have IDT Corporation, you have 3M, 6M, 1Y, 2Y, 2 years, whatever. Then historical. The blue link.
Oh.
On the chart, right?
On the chart.
On the chart, you have historical.
I can't see it. I'm sorry.
Okay. Are we seeing the same?
Where's your cursor? Okay, move your cursors, Doc. Let's see.
There, can you see that?
I don't see your cursor.
Okay, let me close this.
Yeah, now see,
Okay, now we see your
you're
cursor.
almost touching. If you
Up higher.
up again.
Higher.
Exactly.
Yeah, there
That's
you
it.
go.
That's it.
Oh, you know what happened? I opened the chart to show the big chart. That's all.
Oh, I see. So it went to, okay.
Okay.
There you go.
Okay.
I think you just have a very nice setup here. You have the first new 78-day high was a breakout on the 200 EMA. It did not fail perfectly, but basically it's creating a Darvas box, 6 to 8 range.
Okay.
And from 6 to 8 range, there was a breakout on the $8, which went to 9, but failed. But retested that $8. And now we have a breakout to 9, 10, and 11.
So we're looking at a big Davos box.
Yeah, so if you look at
Here to there.
from 8 to 6, from 6 to 8, that's a perfect range, right?
Yeah.
That's a perfect range. And then you have a small range, 8 to 9. Remember what I told you? The Darvas creates a huge base and then a smaller one. And then from that smaller one, it's going to continue, you know, going higher.
Yeah.
So you have, now, if you would like to use this one, you just have to create your target.
Okay. So target price.
And you have your first red. The tail of that first red might be retested. So it just like if you remember pace,
So here.
if you remember pace, that TPNL duck before, that it created 2 candles higher, and then it just basically go up and down in a smaller range on top of the breakout candle.
Shall I bring that up? Okay.
Sure.
Close this. How do I get a chart?
You just have to click. You just have to click the IDT.
Oh, click on here. Oh, yes, that's right. And then change the chart here.
Yeah, change your share. Change your share on the chart that pops up.
New share. Here. Yeah.
There you go. Perfect.
So pace. PAYS.
Oh, that's a nice one.
And then we want to go back, what, 1 year?
Yeah.
Okay.
Right. The February 11. That's almost a similar setup with that. What was the name of the stuff? The
IDT.
IDT.
Yeah.
See here, it created a long base. Then then the price just keeps on bouncing back and forth on top of the breakout candle, and then it keeps moving upward.
Yeah.
So you have the same setup with IDT. Sometimes when you keep orienting yourself with so many charts, eventually you'll be able to catch up a particular pattern that is applicable to what you are seeing, and then you'll be able to remember, this is the kind of move this one is going to do, and you kind of like anticipate already what you need to do.
Okay.
So that's why, as much as possible, open chart, open as much as possible, many charts.
Yeah.
So that way you get accustomed to so many patterns, and eventually it just clicks in your mind that, aha, that's the same pattern I'm looking at with the one that I've seen.
Okay. Yeah, that's something that I'm missing out on because I come home from work and I'm too tired to think.
It's not necessary. Maybe 15. Just spend maybe probably 15 minutes just to scroll.
Yeah.
Just for you to kind of like see. But I want you to see the chart as a kind of like not just as a small pop-up window. I know it's very hard that you have like a little icon of charts there on the first screen of the filter, but you really have to click the chart as a big chart, so that way you can have a visibility of the entire picture, 1 year, 2 years. That's the most important thing, because that way you know exactly how the chart runs. And then you can even notice the volume, the change in volume, amount the amount of volume it had grown.
Yeah.
So
Okay.
and then from there, Doc, you can just click. There is that button, that forward button and then backward button. You just click on that one and it just scroll.
Like that.
Yes. So this one, are you going to play on this? This one is kind of volatile, so you might just leave that one.
Oh. Ooh.
Okay, this one, 200 EMA is still seems to be facing downward. Although here, this is what I would like you to notice. The 50 EMA is just about to break out the 200. So
Yeah.
if the 50 can really break out of the 200, maybe that's the time that you have to take notice of this particular stock, because right now the 30 and the 20 had gone out already beyond the 200, right?
Yeah.
So once this three combination goes out of that 200 EMA, that the potential is it will probably go for an upward run.
Okay.
And if you look at this volume, in contrast with the left volume, look what happened.
From here.
You have a huge volume, plus you look at also the candle. You have a huge candle breaking out from the previous candle.
Yeah.
So it means there is accumulation going on.
This candle here.
Yes.
This one. Okay.
Can you click the horizontal line up? Scribe a line on the top of the candle on the left volume, the left highest volume. Scribe on the high. Sorry, it should be horizontal, not vertical.
Okay, how do I remove this?
Just delete. Click and delete. You click it and then hit delete.
I'm just looking. Where is my delete? I should see it normally. They're on the top. Okay.
Okay. Scribe a horizontal line.
On the top here?
Yes. It just spoke, but it did not break. Okay. So it means that's the high. What's the price of that one? That's somewhere around 550.
This one?
No, that blue line.
Oh.
$5. Okay.
$5. 580 or so.
Oh, 580? The blue line itself, 580. Okay.
Yeah.
So, as long as it doesn't break that 580, there's a big possibility for a run on this one.
Wow. Okay. Oh dear.
And you have a gap up.
Yeah. This one, yeah.
Okay. Good. Next.
Okay.
Don't play that one.
Then it made
It's like seeds all over the place.
Yeah. The volume is bad. This is similar to what we just saw, right?
That's right. It's PJ. I'm looking at this one. Have you noticed that particular formation? That's a letter F formation.
Which is
a breakout and a letter F.
Yeah.
Can be powerful.
Okay.
It's going to come down.
Yes. The retest would be the neckline. 424.
24. Yeah. Oh.
424. So your entry point would be between 425 and 450. And then as long as it doesn't go down below the neckline, you're good on this one. And High Power International, I think this company, they are producing this special equipments for that would give power to remote places.
Oh.
And if you just go to sec.gov, what is the reason behind that pop-up?
You want me to do that?
Can you do it?
Yeah.
Okay.
Let me, so I'll minimize this. No. Where is my, oh, what did I do? Stop.
You stop sharing.
I stopped sharing, yeah. Okay, let me go. Let me just open my sec.gov and we are looking for
HPJ.
HPJ. Okay. No, it didn't come. I think I went to the wrong way. Okay. Search. Company filings. Oh, sorry, just bear with me. HPJ. Okay. So now I'm going to do a share. Go back. Share. Where is it? Here. Okay, there. So now we want the, I think you always say the 10Q we should see, right?
First, take a look. What do you have for 8K, which is the quarterly report?
Oh, this one. So we just click on documents.
Yes.
And then
the first document you have there.
This one. Okay. Let's see. Right. Okay. Assessment merger. So they had some kind of merger, I think.
It talks about merger.
Current report, High Power International, based in Delaware. Phone number, material. So the common stock.
Agreement and plan of merger. Okay. So who's going to be merged into and who's going to be the
Merger with High Power International is merging with the High Power HPJ Parent Limited, exempted company with limited liability under laws of the Cayman Islands. Ooh, what does that mean?
Cayman Island is where you hide your
money.
Your money and not taxed.
Yeah, these people are from Hong Kong. Sharks. I don't know about this. So they're voting board members and
High power, okay. Subject, condition, pursuant in my view.
So they issued shares.
Yes. Now, if HPJ is going to be bought, what is the target price wherein they're gonna buy
Oh,
its investors' shares? Usually they're gonna tell you what is the target price. So it means if, for example, the price right now is like $4 or something, and the target is $7, this is the best time to get in. So that way, once it reaches $7, you're good. You just have to sell it out.
So we go back to Stockfetcher.
No. No, not yet. And Stockfetcher won't tell you that. It's only on sec.gov. Okay. Right receipt for in cash without interest. Okay. Various closing condition. Okay. Equity can amount of 51 million. Subject terms. Okay. Concurrent delivery. It contains termination rights for the company and parent. We have to enter the agreement, the superior proposal. So, what is the proposal?
Saying Essence has committed to and caused one of its affiliates to capitalize parent immediately prior to the effective date. Equity contribution up to 51 million. To pay the merger consideration, expenses, and fees. Wow.
The question is the one buying a private company? So if the one buying is a private company, so it means HPJ is going to be removed from the stock exchange.
Yeah.
But before it's going to be removed, usually it will have a target price. You can also search the keyword target.
On here?
Yeah.
Further down?
No, if you press Control F and then search for that keyword target.
Target. So it's not letting me. Okay. I did a search. Nothing.
Zero occurrence. Okay, maybe that is not. um, okay. Can you scroll down more, Doc?
There's some kind of filing. That's it.
Okay, there you go. Agreement and plan, certificate of amendment, bylaws, form indemnification agreement. Click the press release.
Lithium-ion batteries. Oh,
Hmm?
that's what they do.
High Power International was founded and produces high quality nickel metal hydride. Ah, okay. And lithium based rechargeable batteries. Oh, this is the one that needed for
Cell phones. Or
yes,
cars. Or
for
cars.
cars. Actually, cars. The cars use a wide range of applications: e-bikes, energy storage systems, power tools, medical equipment, digital and electronic devices, personal care products, and lighting. Oh yeah, there's lighting. High power target customers are Fortune 500 companies and top 10 companies. Okay. Mm, that one. The board subject. Okay. High power developer. Okay. Uh, let's see. Just the stockholder. Okay. Subject term and condition merger at the predicted time of merger. High power stockholders will be entitled to receive $4.80. What's the price now? In cash for each share of high power common stock. So they are going to pay $4.80. Today is $4.50. So it's going to hit, you only have 30 cents.
And then they're going to stop trading, right?
Yes.
So not worth
So it's
too much risk.
yeah, it's too late for 30 cents.
Yeah.
So it's like $4.80 in cash for each share of 67%. Company's closing price of $2.88 per share on June 1, 2008, the last trading day prior. Okay. So the target is 480. In that case, you're already at 450. There's unless you can buy a lot of shares
Yeah.
between 450 and 480, you have 30 cents margin. But no, you don't want to
No,
risk your money on that one.
that's less than 10%.
Yeah. So that's why always take a look what's the reason behind of a particular move. If the reason behind usually is because the revenue are really like doing exponentially
Yeah.
and a new product getting in and let's say a new installation of a new CEO or something like that, my goodness, those are the ones that you can ride.
Yeah.
You know, or maybe giving out a dividend. Yeah, right with those. But in this case, the reason behind it's like, okay, each shareholder will receive 480. Well, what is that? That's peanut between 450 and 480. That's only 30 cents.
Yeah.
So
But they issued shares at 0.001 cents, right? Extra
yeah, but that's insider traders.
insider trading. So those people will make a lot of money.
Correct.
But like us, we won't. We don't have a chance.
No, no. So in this case, there's really not much that you can do with a target of 30 cents. Okay. So and in this case, you can just forget about this. Although that one is a very nice move there. Although when I tried creating a triangle formation on this one, it looks like this one is still going to go down. From 450, it will bounce. It will actually go back to $3 something, or bounce from 350 before it gets out from the VCP formation. A VCP of $8, from $8 to $2, contracting.
HPJ?
Yeah,
Oh,
HPJ way back to 2014. Way back to 2014, it hits $8. Then it just keeps going down. And if you look at also the 200 EMA, the 200 EMA is actually going down.
yeah.
So it's not a good stock.
Okay.
Okay. It's around 4 o'clock, 4:13 already. So at
Yep.
least I have given you the idea of what to do, especially with the Stockfetcher. That if you want to go deeper on checking the historical data, so that you will know the different posts of the new 78-day high, because two consecutive N78 day high with a very good volume, usually that would be, there still be a good continuation on that one, especially if they're like close apart. And I would like you to study more and dig deeper on some of those moves. In fact, if you can go, this will be your assignment. Go over on 2019 filter, June 27.
2019, June 27th.
Yes.
The new high.
Yeah. Oops. And then after that one, I'd like you. Okay, from 27 to what is that one? Give me a second here. I'm going to calculate it. 27 is 3 days. 1, 2, 3, 4, 5, 6. So 6, 575 plus 6, 581. Offset 581. So from today's date, you offset on 581 days.
Now?
No, this is your assignment.
Okay.
And do you want to choose a particular stock or anyone?
I'd like you to take a look. Sorry, not okay. It should be 585. Hold on.
I'll be right back. I need to go to the washroom. Sorry.
March 15. So I'd like you to take a look at this stocks: APPF, CATS, AVRI, CPRX, and ERI.
And can you share your screen since Doctor is done? Let's see.
Share. Okay. You see it?
Oh, maybe doctor need to stop. I still see it's on.
So there's CATS,
Okay, let me write it down.
which had gained 918%.
Say again, let me write them down. CT.
CATS.
CHTS.
No, cats, like cats, the plural cats.
Oh, CATS. Okay.
Yeah.
Mm-hmm.
And CPRX.
CPRX. Mm-hmm.
And EVRI.
EVRI.
No, yeah, like EVRI.
Yes, EVRI.
Yeah.
Okay.
The HPJ had shown here, but we discussed already the HPJ.
Okay.
The other one is ERI.
Okay, I'm back.
ERI.
Do you want me to stop share?
I just shared, Doc. So this is what you're going to do. You click the new 78-day high offset, and then based on the Friday's date, and then you offset 580 days. You should be able to see what I see here. I would like you to investigate on CATS, CATS, APPF, EVRI, CPRX, and ERI. That's it. These guys, they had gained more than 150%, and one had gained 918%.
Offset was 580.
Offset 580,
Okay.
which is March 15 of 2017. Then I'd like you to study the charts of this three, oh no, how many? 1, 2, 3, 4, 5, 6. Six companies. And then look for the reason why they had gone so high. This CATS, imagine it had gained 900%.
Wow.
CPRX had made a pocket pivot, a deep one, but still made 138%. EPPF, 299%. ERI, around 125 something. So investigate them. Your assignment next time or within this week.
Okay.
Okay, let me know what you find.
Okay. Oh.
All right. And we'll close the day. And have a nice weekend to you guys.
Thank you.
Enjoy your weekend.
Yeah, thank you.
Thank you, Jerome.
And keep studying. Study the last lesson I just sent you this morning.
Okay.
Oh. Okay.
Okay. Have a good one, guys.
Thanks. And you're sending this one too, right?
Thank you.
Yes, I'm going to actually I recorded this one, so I'm going to send it to you as well.
Okay. And the previous ones that you had, when I tried to click on the links, it said that the link.
Oh, I am moving now all the videos to YouTube, so that way it's accessible anywhere.
Okay.
And not only the because I had it stored in OneDrive.
Yeah.
I was thinking that maybe it's good that it's going to go public, so that way everyone can utilize it also.
Okay.
So yeah, don't worry. As I move them, I'm going to give you the link as well as the explanation of all those.
Okay. Thank you.
Okay.
Okay.
All right. Have a good one, guys. Take care.
Thank you, Gerald.
Thanks for your
Signing
time.
off.
All right.
Bye bye.
Bye. Bye, Kufri.
Bye, doctor.